Boom, welcome back to Bitcoin Bulletin, your #1 source for all things crypto. We're kicking things off with a bang today, diving headfirst into a market that's hotter than ever. First up, Wong from Independent Reserve is breaking down the altcoin season paradox. Is Bitcoin truly losing its grip, or is something bigger at play? Then, get ready for a game changer in stablecoins as Bitget Wallet integrates with Aave to offer a jaw-dropping 10% APY on USDC. That's right, a stable 10% yield. But wait, there's more. Metaplanet just dropped another massive Bitcoin buy, adding over 130 coins to their already colossal stash, pushing their total holdings to over 20,000 BTC. And finally, we're looking into the future with AI models predicting Bitcoin's next move. Will it be a shock or a steady climb? Stick around, you don't want to miss this. Hit that like, subscribe, and ring the bell so you never miss an update. The alt season paradox: is Bitcoin losing its grip? While the crypto markets have been buzzing with altcoin rallies, with Ethereum hitting new highs and the altcoin season index climbing, a crucial question arises. Is Bitcoin's dominance finally fading? Wong, head of trading at Independent Reserve, offers a compelling counter-narrative, suggesting that beneath the surface, institutional investors are actually accumulating more Bitcoin, signaling a deeper confidence in its long-term value. Wong observes a distinct bifurcation in market behavior. On one hand, large investors and institutions are steadily acquiring Bitcoin, viewing it as the most reliable asset with the strongest track record. On the other hand, some early investors are cashing in on recent gains. This dynamic, according to Wong, creates a stabilizing effect, potentially forming a price floor and dampening volatility. Data from Independent Reserve's index shows that a significant majority of Singaporeans still view Bitcoin as a primary asset for value storage or investment, with most local investors holding it in their portfolios. Despite the allure of altcoins and their potential for rapid gains, Wong emphasizes Bitcoin's unique characteristics: true decentralization, a fixed supply, and over a decade of proven reliability. He likens Bitcoin to an index fund, a proven winner that consistently compounds value, essential for institutional credibility. Altcoins, in his view, are more akin to speculative penny stocks, often performing only after Bitcoin has established liquidity and confidence. This perspective challenges the common narrative that altcoin surges diminish Bitcoin's importance. Wong points out that Bitcoin continues to break new highs, and its risk-adjusted returns, measured by the Sharpe ratio, have historically outperformed gold and the S&P 500. This resilience explains why institutions continue to anchor their portfolios in Bitcoin and Ethereum, assets with the necessary liquidity and regulatory clarity. Retail activity, conversely, is often seen in more speculative altcoins, driven by momentum and fleeting narratives. Research indicates that while retail attention can sometimes negatively impact crypto returns, institutional inflow bolsters them. Wong highlights that in 2024, institutions and ETFs accumulated significantly more Bitcoin than individuals sold, indicating a strong performance for institutional investors. This contrasts with retail investors often chasing short-term altcoin pumps. Wong advises against trying to time the market, suggesting dollar cost averaging as a more reliable strategy, with a significant percentage of Singaporean investors reporting success with this method. He also reframes Bitcoin's relative stability during altcoin rallies not as weakness, but as a reinforcement of its digital gold narrative. Just as gold doesn't soar when equities rally, Bitcoin's steadiness amidst altcoin excitement validates its role as a store of value. Wong believes Bitcoin's increasing integration into corporate treasury strategies and its growing market cap naturally lead to lower volatility. He advocates for following capital flows, not just narratives, as smart money continues to accumulate Bitcoin, forming the foundation for future market growth. Don't go anywhere, because the crypto world is always full of surprises, and our next story reveals a new way to potentially earn big on stablecoins, and it might just make them stickier than Bitcoin itself. Wallet native yield: can stablecoins outshine Bitcoin? In a move that could redefine the stablecoin landscape, Bitget Wallet has launched Stablecoin Earn Plus, a new product offering a remarkable 10% annual percentage yield on USDC. This innovative service, powered by an integration with the Aave lending protocol, provides a compelling alternative for investors seeking to generate income from their crypto assets without the volatility associated with Bitcoin or Ethereum. Jamie Elkill, CMO of Bitget Wallet, explained that this product directly addresses the desire for users to utilize their crypto holdings without constant market speculation. By offering a guaranteed 10% APY on USDC deposits up to $10,000, the service allows users to earn a steady return, leveraging the power of decentralized finance directly within their wallet. This yield is achieved by routing user funds into Aave's lending pools on the base network, with Bitget Wallet supplementing the earned interest to ensure the promised 10% APY. This initiative presents a significant opportunity, especially for global users who may have limited access to traditional fixed-income instruments. The product is designed as a long-term service, offering instant liquidity and no lockup periods, making it an attractive option for those looking for passive income. While it's possible that some capital might rotate from more volatile assets like BTC and Aave to capture this higher yield, the per-user cap and retail focus are expected to limit its overall market impact on major cryptocurrencies. Elkill also noted that this development could boost demand for USDC, potentially increasing aggregate DeFi borrowing rates and channeling more liquidity into lending protocols. Bitget Wallet emphasizes security, maintaining a user protection fund backed by 6,500 BTC and ensuring all transactions are verifiable on the blockchain. Currently available on the base network, Stablecoin Earn Plus has plans to expand to other stablecoins, protocols, and blockchains, signaling a growing trend towards accessible DeFi yield opportunities within user-friendly wallet interfaces. While stablecoins are offering juicy yields, one company is doubling down on Bitcoin, adding to its already massive holdings. We've got the details on Metaplanet's latest multi-million-dollar purchase coming up next. Metaplanet's Bitcoin stash grows, over 20,000 BTC secured after $15 MBUY. Metaplanet Inc. has once again demonstrated its unwavering commitment to Bitcoin as part of its treasury strategy, acquiring an additional 136 Bitcoin for approximately $15.2 million. This latest purchase, made at an average price of $111,783 per coin, brings Metaplanet's total Bitcoin holdings to an impressive 20,136 coins, solidifying its position among the largest corporate holders of the cryptocurrency. The company announced the acquisition on Monday, placing it as the sixth largest corporate holder of Bitcoin. At the time of the purchase, Bitcoin was trading near current market levels, underscoring Metaplanet's strategy of converting parts of its balance sheet into crypto exposure rather than solely relying on its core business operations. However, the market reaction to this significant buy has been mixed. Metaplanet's shares fell 2.3% in Tokyo trade on Monday and are near a 4-month low, extending a nearly 20% rout from the previous week. This slide appears linked to a broader pullback in Bitcoin's price following August's record highs, suggesting investors are wary of companies whose stock prices are tightly correlated with volatile digital assets. This trend is partly driven by the increasing availability of alternative investment routes. Exchange-traded funds now offer direct Bitcoin exposure to both retail and institutional investors, bypassing the need to invest in companies whose primary business may not align with their crypto bet. While companies like MicroStrategy remain the largest corporate Bitcoin holders, their valuations also swing with crypto prices, as seen in MicroStrategy's nearly 15% loss in August. Questions are being raised about the ongoing appeal of holding Bitcoin on corporate balance sheets, especially as new players like Metaplanet and GameStop have experienced mixed results adopting this strategy. Analysts also point to potential crowding in the market, where numerous companies pursuing similar treasury strategies could dilute future upside if new buyers diminish. Metaplanet's market value, around $5 billion, exceeding the market value of its Bitcoin holdings, has drawn scrutiny, with critics warning that tying company shares too closely to Bitcoin increases vulnerability to crypto's price swings. Despite these concerns and its shares remaining under pressure, Metaplanet continues to expand its Bitcoin reserves, with future market movements expected to determine the success of its bold bet. Even as companies load up on Bitcoin, what does the future hold for its price? AI models are weighing in, and their predictions might surprise you. Stay tuned for the latest on Bitcoin's AI forecast. AI models predict neutral Bitcoin trend, warn of late September shock. Bitcoin is currently navigating a consolidation phase following a robust multi-month uptrend that began in April. After weeks of heightened volatility and selling pressure, BTC has demonstrated resilience by holding steady above critical support levels, thereby maintaining the broader bullish narrative. Some analysts interpret this stability as a sign of Bitcoin's strong underlying market structure, even suggesting a potential push beyond all-time highs in the near future. Despite prevailing uncertainty and cautious sentiment, sustained accumulation by long-term holders and consistent institutional flows are providing a foundational support for Bitcoin's price stability. While short-term corrections remain a possibility, the overall market sentiment leans optimistically towards BTC preparing for another upward movement. CryptoQuant analyst Crypto Onchain's Bitcoin TFT AI forecast indicates that BTC is likely to trade within a mostly neutral range for the upcoming month, avoiding sharp breakouts or collapses in the immediate term. This suggests the market is in a period of digestion after recent gains, consolidating before attempting further advances. The Temporal Fusion Transformer, TFT, AI forecast projects a neutral trading range for Bitcoin in the coming weeks, though it highlights a sharp rise in uncertainty. The model anticipates a modest decline of approximately 1.1% over the next 7 days, followed by a 1.72% decrease over 30 days, reinforcing the consolidation outlook. However, the most critical signal is not the projected modest downside, but the widening confidence intervals, with model uncertainty climbing above 50% by the end of the forecast period. This elevated uncertainty signals increased risk and the potential for severe volatility, opening the door to multiple scenarios. The primary scenario, derived from a combination of WaveNet and TFT models, suggests Bitcoin will remain within the $108,000-$120,000 channel for the first 3 weeks of September. However, a surprise scenario could unfold in the final week. If a strong catalyst emerges or market sentiment shifts abruptly, the heightened uncertainty could trigger an explosive move, either a breakout to new all-time highs or a sharp retracement. Technically, Bitcoin is trading at $112,146, showing a 1.77% rebound after recent volatility. It has successfully defended the $110,000 support zone, which has served as a floor during recent pullbacks. Key support levels include the 50-day SMA at $107,765 and the 100-day SMA at $100,647, while immediate resistance is at $115,000. A decisive move above $115,000 could pave the way towards $120,000-$123,000, where the all-time high resides. Conversely, a failure to hold $110,000 could lead to further downside, potentially targeting the $107,000-$105,000 range. The last week of September is poised to be decisive, with volatility likely dictating Bitcoin's next significant price action. And that's a wrap on today's top stories. But before you go, let's do a quick recap of the biggest headlines that rocked the crypto world this week. And that's a wrap on today's top stories. To recap, Mark Wong is challenging the altcoin season narrative, suggesting Bitcoin's institutional accumulation is stronger than ever. Bitget Wallet is shaking things up with a new 10% APY on USDC via Aave integration. Metaplanet continues its aggressive Bitcoin accumulation, now holding over 20,000 BTC. And AI models are predicting a neutral trend for Bitcoin, but beware of potential shocks in late September. Don't forget to smash that like button, subscribe to Bitcoin Bulletin for more daily crypto insights, Hit the notification bell so you never miss a beat, drop a comment below with your thoughts, and follow us on all our social channels. We'll see you in the next one.